Ghana's government says it had roughly half this year's economic growth forecast and saw higher inflation in a primary deficit, whereas it was hoping for a surplus previously. Now, Finance Minister Ken Ofori-Atta disclosed this during a mid-year budget review in Parliament, that the economy is growing 1.5% in 2023, down from the previous forecast of 2.8%. And that last year's budget deficit, which stood at 11.8% of gross domestic product, almost doubled the target of 6.3% of the GDP. Now, we know that Ghana has been struggling in the past few months and in the past 1 or 2 years with its worst economic crisis in a generation, and it's also restructuring its debt as a condition for receiving an IMF support program. Joining me now is Patrick Baah Abankwa, financial analyst and investment consultant, as we look at Ghana's forecast getting revised down. Now, Patrick, welcome to the show. Thank you so much for joining me on Business Edge.
Thank you for having me on your show this morning.
So with this mid-year review, we've seen Ghana's economic performance really showcasing a mixed bag of results. So slower growth rates, a surge in inflation as well. In terms of the factors contributing to this drag on Ghana's economic growth for this year, what are we looking at?
In spite of the fact that the growth rate this year has been a bit slow, other indicators show that the economy is indeed recovering from the bad shape that we experienced last year. You look at inflation and ending last year around 54%. Currently, inflation is around 42.5% as at the last check. We look at issues relating to the import cover is gradually shaping up a bit in terms of interest rate on loans are also a bit stable at the moment. Last year, the Ghana cedi depreciated against the major currencies, especially the dollar, close to about 32%. Currently, it's around 22%, which is also an improvement. So basically, we can see that there has been some kind of growth in the economy, and much of it can be attributed to an issue relating to the IMF coming on board to give some kind of stability to the economy, give some kind of investor confidence into the economy, which is keeping the shape that we are experiencing now. Of course, when you compare what we are doing now, 2023, during 2021, before the challenges we faced last year, we can see that there's still a gap of what government should do to ensure that we get to a very stabilized situation.
And it's interesting you say that because, again, a very mixed bag. We know where things stood with Ghana right before the pandemic and even during the pandemic. Coming out of the pandemic, Ghana was seen as a prime example of an African economy that was able to be quite resilient and also show some growth. And then just this swift, almost 180 turnaround. But Patrick, let me ask, in terms of this sort of the mixed bag we're seeing, what are the sectors of the economy that are taking a hit and the sectors that have proven to be quite resilient and are also helping us to see the positive side of things?
So in terms of the sectors that are helping the economy, of course, you can look at the service sector. For the last 3 years, the service sector has been holding the economy of Ghana, growing at around 50% and above over the period. The industries have not really recovered fully from the challenges that we face post-pandemic and even last year when the capital market was shut to Ghana. So the industrial sector is not doing that much. The financial sector, in terms of the banks, last year were hit so much by the domestic debt exchange program, which made about 23 or so of the banks making losses for the year. But this year so far, half year, most of these banks have recorded profit, which is also adding up to the revenue of this country. So in terms of the overall sector that is performing that well, we can look at the service sector, the telecoms, the educational sector, the hospitality sector, tourism sector. These are sectors that are driving the economy at the moment. But we still need more from the industrial sector and also the manufacturing sector, which over the years have been the bedrock, not forgetting the main traditional agricultural sector, which employs about 40 to 50% of the workforce in the country.
So let's go back to the forecast that the finance minister shared. So initial forecast was 2.8%, but Ken Ofori-Atta had to tell lawmakers that the government has now seen 1.5% for 2023. Now, with this mixed bag you've talked to us about, do you think there are any indications that we might see it later pick up this year? Could we see Ghana hitting that 2.8, 2.5% in the second financial half of this year, and maybe that 4.9% by 2026 as projected? Or do we need to see some kind of revision of even the 2026 projection, the 2025 and even 2024 economic projections as well?
I'm not too sure if the 4.1 or 4.9 that the finance ministry is talking about is achievable. But historically, the economy of Ghana has always picked up in the second half of the year because that's where we have a lot of activities. If you look at how the first half of the year has gone, the challenges that we face, the challenges relating to the dollar issues, you can say that indeed we should expect a higher growth in the second half of the year. I'm not too sure of the 4.9. I'm looking at from where I sit, I look at the indicators and I look at how the economy is recovering. We should be looking at Ghana's economy, GDP growth, ending around 3.2, 3.3, maybe highest will be 3.5 by the end of the year. But I see the prospect and businesses picking up in the country. When you go to the sectors are improving. Of course, one of the challenges that we face in terms of where we are losing revenue has to do with the port system in Ghana, where business are no more important as expected. So revenue from such base is also dwindling, and the government will have to now look at policies around importation in this country to ensure that we get some growth, which will also trickle down to the growth that the minister talked about by way of trying to hit the target of 4.9.
And I want two questions before I wrap things up with you, but let's take this on because the finance ministry is seeing headline inflation at 31.3%. We've talked about economic growth forecast now being slowed down to 1.5%. And that comes with a projection, that the 31.3 comes with a comparison of a projection of 18.9% that was initially given when the 2023 budget was first presented in November last year. But let's look at the implication of this for the Ghanaians, for Ghanaians on the streets, market prices, unemployment rates, cost of living, which has been a massive issue across the continent, production, consumer purchasing power, and all of that. How has this, when we look at the translation of a 1.5% growth rate for the economy, what does that translate to for Ghanaians and Ghanaian businesses?
It actually gives us a clear indication of the kind of cost of living that the country is experiencing. People's purchasing power has been actually shortened by the high rate of inflation in the country. Businesses are not expanding because of the taxes that we are battling with. Don't forget, this year alone, there were 3 more taxes that were introduced somewhere in April, which puts a bit of cost of production going up in the country. And that also is impacting the ordinary Ghanaian on the street because now the little income you are earning, you are being asked to pay extra tax. The little income you are earning, you are also pushing some into high cost of living because things are not working as expected. So it's really putting a toll on the businesses in the country. Don't forget the issues relating to taxation, issues relating to cost of running businesses, and that has also caused some businesses not to expand. So most businesses are not expanding to even employ the teaming youth who have come out of school to even get something to do. When you want to also go into the entrepreneurship side, you go to the banks and the interest rates are above 30% at the moment. So it means that people who are not being employed are also not given access to funds to expand or set up their own business. Even when they get the funds, the rates are quite high and makes a bit of difficulty when it comes to getting some source of revenue for the people in the country.
All right, Patrick, one final question, if you can do this for me in a minute. You mentioned policies, and that's also part of the questions I had here for you. So the Ghanaian government has announced it's adopting a range of measures that are aimed at improving the economic climate. We know, of course, as you mentioned, 3 taxes being introduced, the IMF situation, just the overall prevailing negative economic situation the country is facing. In terms of 3 policy measures that you think could make a significant difference for the rest of this year, what do you think they should, what do you think they are, and what do you think the government needs to quickly focus on, very quickly?
The first thing I think the government should look at is to look at the taxes at the port. We have a lot of businesses moving their goods from the Ghanaian port to other neighboring ports. Government should look at the taxes to review it. Secondly, government should look at measures to ensure that the dollar rate comes down to give people some kind of leeway to do their businesses. The third one is that government should stop the continuous raising of the policy rate and bring it down to make cost of living and cost of production and cost of loans in this country a bit lessened for businesses who would then expand and employ more people in the country.
All right, so measures there. We hope that government also is in line with you, and those are the measures we're going to hear about in the coming days and weeks. Patrick Baah, Abankwa, financial analyst and investment consultant, thank you so much for joining me today.
Thank you too for having me on the show.
All right. And we'll continue to keep our eyes on developments in West Africa's second largest economy, gold, cocoa, and oil producer that came into the pandemic and out of the pandemic smelling like roses, but has had a very, very difficult few years after that. Can Ghana find its footing as the rest of the year continues? A 1.5% economic growth rate is not what Ghana or even West Africa needs at this point in time. So let's see what happens in the coming weeks as the finance ministry and the government also sees what they can do. And that's it on Business Edge. At 12 p.m. West African time, you have News Central Now coming your way. And from there, of course, you can follow us on social media platforms at News Central TV. We have an app you can download, and there's a website you can also visit. I'll see you again sometime soon. I'm Tolulope Adeleru-Balogun.